So the big question is what's going to happen with lumber prices? It's been up and down all over the map. It's been in the news. As a licensed general contractor, we have to deal with this every day and make predictions based on what the lumber prices are going to do, but also what's reality for today. So here is a 5-year chart of lumber prices. Look, for many years before, it always traded in a narrow range, between the 200 and maybe 500 range. There was some spikes, back in 2018 it spiked up a little bit, but mostly it's very stable and constant. And then about 2 years ago is when the big march forward happened. June in 2020, it started its way up. And the first time it was at about 1,000 was maybe a year and a half ago, September of 2020. And then it dropped. People get scared. Psychologically, look at the number where it pinches off. Hits 1,000, people see, oh, this has 4 digits in the price, and it goes down. Remember, we're talking about dollars per 1,000 board feet on this quote. And then it drops down. It finds some support at 500. Again, it's psychological. 500 is a round number. And then it starts marching back up, right? And you get a peak. And then it goes back down. Where does it bottom out again? 500. So it's found a new floor support level at or about 500. Marches up again. And this is over the course of 2 years. You get to 1,500. Again, that's a psychological number where people get scared and it bops back down. Today, down under 700 again. But what does this mean? We're never going to go back to $200 or $300 or $500 lumber prices. The support level is at least at 500, and the market and builders and clients have learned that prices at about the $1,000 range are doable. People build houses paying $1,000 for lumber for 1,000 board feet, and builders were able to construct houses. The housing market for new homes was able to absorb that price point. Many of the houses built within the last year, new homes were built with lumber $800-900, and they're getting sold. And there's a shortage. New homes get sold, snapped up instantly. In fact, proof of the support of that price level is many new subdivisions are being bought up by investors. There was an article last week where an investment company went to a builder that built in Central Florida 45 homes in a subdivision. They said, look, don't put them on the market with a realtor to sell them one at a time. We'll buy the whole thing. And the cost basis for that subdivision was $880 for lumber. And the investor bought it, and they're going to make money with it. You're going to see these ups and downs, this volatility. But you're not going to see a reversion back to this level, right? You're going to see a new norm probably between $750 and $1,100. You may not see, $1,500, $1,800 lumber anytime soon, but once it stabilizes, you'll see a lumber equilibrium, between $750, maybe $1,100. When it gets over 1,000, people might get scared again, but it's not going to go back down to this $300 to $400 range, because builders and buyers and home remodelers have already factored in that's the price into their bids and quotes, and quite frankly, the market has accepted it as a new norm. In the same way that house prices have gone up dramatically, and that's now accepted by the market, this price for lumber is now what people expect as a final result. Look, the person who is remodeling their home or putting in an addition or buying a new home, they don't care what the price of lumber is. They care what the final price of their house is. Lumber represents maybe 1/3 to 40% of the cost basis of a new home. You have labor that represents 1/3, and then you have fixed expenses, land, site work, permits that represents about 1/3, roughly. Depends on the market. There may be, 40% here, 30% there. So the lumber inflation, if lumber goes up 20%, it really only adds 7% or 1/3 to the price of a home. That's already been baked into the market. Home prices are up 40%, 50%. So even the other increases in the labor cost, which are higher, maybe 40% higher in labor costs. So you have a 20% component there. You have maybe a 5% component on the fixed expense side. So by the time you add those up, it maybe is a 30% increase in the price of the finished product, the deliverable, the new home, the remodel, the addition, and that's acceptable. Most people figure it's 30% higher, 40%. If I did an addition that was, 200 grand 2 years ago, it's going to cost me 250 now. Right? 25-30% more, maybe 260 without land. If I'm buying a new house or building a new house, it might have cost me 300 2.5 years ago. It's going to cost me 400 now. That's on par with the market for real estate. So these lumber prices in the $700, $800, $900 price point is not going to affect the market that much. The bigger problem is going to be availability, not so much of lumber, but of fixtures, appliances, trim, even copper for wires and for plumbing. And the other problem is going to be labor, cost, and availability. Subcontractors, they're booked. Good ones are. So if you're looking to build, the biggest problem for the GC is finding your subs, putting together a build schedule, more so than bumping the price of the finished product by 20 or 30,000. Most larger projects, if it's 20 or 30,000 more than what it was 2 years ago, that's going to be nothing to the buyer. In fact, cars, most people that buy cars are now paying 10,000 more for a car than they did 2 years ago, and it's not slowing down the car market. Go buy a dealership in your area. There's no cars on the lot. And the same car that you buy today for, let's say, $48,000, 2 years ago cost 35 or 36. So if a car can go up 10,000, a remodel can go up 25 or 30,000, no problem, and a new house can go up 80 or 90,000 or 100,000, no problem, because people expect it. Look, gas prices are double. People know the prices are higher. This component of lumber doesn't make a huge dent in the house. Makes a little bit, but it's not the biggest factor that people are looking at. Because of that, these lumber prices are the norm. This little dip right here, even at the end of 2021, was actually more about availability of particular lines of lumber, types of goods, than it was the market. During this time, much of the lumber that would have been at a higher price point wasn't even available because of the floods and the storms in British Columbia and supply chain. Were there more availability of the higher price lumber, this would have been higher too. This was a blip. This is the real market. If you actually drew a line from June of 21 until November, that 6-month period, and kind of kept it more even, this is your range for lumber. This is what we're seeing. So, and it's not the lumber yard itself that's marking up as much. In fact, we have a lumber yard here we deal with, and the guy there wants to get out of the business. He's put his lumber yard up for sale because he's not really making that much more money, and his costs are higher. Right? If you have, maybe, on a stick, you have a $5 stick of lumber. If you make $1 or make 50 cents, whatever it is. Now, if that stick of lumber is $8 or $9, you make the same dollar markup. Your percentage margin is lower. Instead of a 20% margin, now you have an 8 or 10% margin, and you still have the same overhead. You still have the same rent, electricity, employees, labor, taxes, all your expenses, and have a smaller margin. So the lumber yards themselves are being squeezed. They can't hold as much inventory either, because lumber yards, they have to have cash sitting in their inventory. You might have $400,000 or $500,000 worth of inventory sitting in your lumber yard, or $1 million if you're a big yard. And if the lumber price goes up 30%, now all of a sudden you need an extra 200 grand in cash to fill your yard. And if you don't have it, people are going to go somewhere else. So it's not the lumber yard itself that's benefiting from this. Really, nobody is. The costs all around are going up. Even the producers, the mills, the forestry companies, they're maybe achieving a little bit more gross profit, but their costs are higher too, for insurance, for labor, trucking. All this lumber has to come on a truck. What's diesel cost now? $6, right? All that has an effect. None of that's going away. The diesel price is going to be higher, employment's going to be higher, taxes are going to be higher, insurance is through the roof. That's going to keep these numbers high. So if you're a builder looking at these numbers, knowing what to expect, plan on $700-800 for a strike price. If you're a home remodeler as a client, expect the numbers are going to be where they are now. They're not going to go down. If you're looking to build a new home, actually you're in the best position to be in, because right now building a new home is actually appealing compared to buying an existing home, because you can take out some of the markup if you self-build, even if you hire a contractor to help organize some of it. So a lot going on in the marketplace. Don't let this type of graph throw you that it's that big of a deal, or even don't let it throw you that the strike price went down below 700 today. That means nothing. It doesn't mean it's going to be back down here in the $300 to $400 range. Round it off, you're at $1,000. Is it going to be a little less than that? Probably. Most of the time, it'll probably be $700-800. But over the next year or two, this will be the new norm. $500 to $600 will be your floor, and it'll have spikes up from there. It'll get more to an even distribution like it was for the last 10 years. But once all this craziness gets worked out of the system, you're going to be back to that $700-800 range as a floor, maybe bump up to $1,000 2 or 3 times a year, and then that'll be your new norm. Inflation's not going away, because all of the things that go into producing the materials are permanently ratcheted up. Fuel, labor cost, insurance, even the cost of the lumber yards. And the forest leases, that's kind of a fixed cost, but the new renewals of leases and the replanting of trees is all going to be higher too. Take it for what it's worth. Put your comments below. Let us know what you think, and we'll see you in the next video.